So you're trying to find the next Tesla. A lot of people have made a lot of money, but even more people feel like they've missed out. Now, I got into Tesla what I would consider relatively late. My cost basis is somewhere around $1,000. I don't know exactly, but I've bought a considerable amount more in the last few weeks. I was starting to buy it around $500–600, bought more at $700, and I've just been keeping adding over time. I've sort of dollar cost averaged, and my cost base is probably around $1,000. Now, of course, you know, hindsight is 20/20, right? You can look back and think, oh, I wish I bought loads when they were 500, 600, 700, but you know, you can never look back like that. You've just got to be sort of happy with what you've got and grateful for whatever you've got, right? But there's a big reason why people are jumping on this EV or renewable energy bandwagon. Is because Tesla has gone from 350 a few months ago all the way up to 1700, and now it's hovering around 1600. It seems to be floating around there the last week or so, but people are desperate to find the next Tesla. But you can get seriously hurt doing this, and you can lose a lot of money if you put money into companies which you don't really know a lot about. So in this video, we're going to look at 4 different companies. We're going to look at one which you should completely avoid, 2 which you should watch, a bit of a spec play, and 1, you know, obvious one, which you should still consider buying at the price it's at. But before we start, please hit that thumbs up. Please also subscribe down below. It is a brand new channel, so it really, really help out. It'll basically just help the video get, you know, seen by more people, and you know, I want to grow the channel. So yeah, that'd be great if you could help out in that way as well. Now, renewable energy is the future. Whenever I put money into a company, I always think, what's the world going to look like in the future? So in 10 years' time, do you think electric vehicles will be a lot bigger? If the answer is yes, then you might want to look into an electric vehicle company. Or if you think the cloud will be even bigger in a few years, you might want to look into a company which offers a good cloud platform like Amazon or Microsoft. So you've always got to be forward thinking. Let's say you plan on holding a stock for 10 years. What does the world look like in 10 years to you? What do you think? Look for the trends, look for the innovation. That's what I always think whenever I, you know, invest in a company. Do I think renewable energy will be even bigger than it is now in 10 years' time? Yes, I do. So I want to look at a few companies in this area which I can make some good money off. Now, there's a really good reason people are looking for renewable energy companies. It's basically because it's cleaner. The government are pushing towards, you know, helping companies out which are renewable, provide renewable energy sources. You know, it's cheaper, and also it's an unlimited resource. They reckon by 2060 that there'll be no fossil fuels left on the face of the earth. I know it seems a long way away, which it kind of is, but in the grand scheme of things, fossil fuels have been around for donkey's years, and it's all we've ever really used. So, or for the last few hundred years anyway. So you've got to consider this before investing in any company, right? What's the world going to be looking like moving forward, okay? Let's get started. Hit that like button and subscribe down below. So I must say at this point, I am not a financial advisor. You should always do your own research before looking into any companies whatsoever. But this first one for me is a big no, and you should avoid it like the plague. That is a bad joke. I should not say those things in these times. Too soon. But it is Nikola Motors. Now, Nikola Motors, they don't have any revenue. They don't have an estimate even of when their first vehicle is going to be ready. They have a market cap of $11 billion. Their stock has gone from $10 when they went public all the way up to 80, and now it's hovering around 30. Now, just to give you some indication of, and put this into a bit of context, when Tesla had an $11 billion market cap, they had delivered 22,000 vehicles, and they had $2 billion in revenue. They had 8 supercharger stations. Nikola have none of that. They have no revenue, they have no vehicles delivered, and they have no supercharger stations. In California alone, Tesla have 1,600 charger stations, and that is growing by the day. They are constantly building supercharger stations for Tesla owners to recharge their vehicles. Nikola don't have any vehicles, they don't have any supercharger stations. Red flag for me, big red flag already, and that is already one. They do not warrant or justify having an $11 billion market cap with no revenue and no products coming out soon. So reputation is everything, isn't it? And Tesla have got such a good reputation in the market, Nikola haven't. They've come out, and in 2018, the CEO, Trevor Milton, has tried to sue Tesla because their semi-truck looks similar to theirs. I think that's very hypocritical given the nature of the name, you know? Nikola, Tesla, and then there's Tesla, and then Nikola comes along. It just doesn't make sense to me. And I think it's a really, really bad thing to do when you're so early, in the startup stage of your company, right? You're coming out, you're trying to sue everyone. This Trevor Milton guy, he's trying to sue everyone. This is investors' money. He's using investors' money and he's trying to sue. You've got to be so resourceful when you start a company. You can't be going out there and spending money on lawyers and all these fees and wasting your time and energy on trying to sue other people. Money is so valuable when you start up a company. You've got to watch every single dollar. It's the most important time for your business. And he is going out there and wasting his time, his money, and his energy on suing other people. Red flag. When you invest in a company, the CEO is very important. They are in charge of the direction of the company. So you want an Elon Musk. This guy, Trevor Milton, is not an Elon Musk. Now, let's look at why. He stepped down as the CEO when Nikola went public. Bad sign. He owns a $32.5 million ranch in Utah. He bought it at the end of last year, so not so long ago. It's the most expensive house in Utah. He is constantly talking about Elon Musk on CNBC and wherever else he gets interviewed. He's saying he gives him some backhanded credit, but most of the time he's trying to mug him off, basically. Now, I'll just drop in a little story at this point. It's something I learned quite a few years ago. I'm from the UK, and I came to Australia probably about 6-7 years ago. When I first got here, I was working at this backpacker travel agent. So I'd stand outside a travel agent on the street in Sydney, on the main street, George Street, and basically backpackers would walk past like me, and I'd just get chatting to them, and I'd see if they needed any help with booking their trip up the East Coast or anywhere around Australia, New Zealand, or Fiji, or Bali, or wherever that was. So when I was there, we were at the very, very top of George Street, but there's about 8-9 different travel agents in a row. And my manager told me something which has been invaluable to me throughout my career. She said to me, people are going to constantly come in and try and price beat. They're going to constantly come in and they'll say they've gone to one of the other agencies, can we beat their price? And the number one thing is you don't want to be defensive. You don't want to talk bad about other companies. You don't want to say, no, they're terrible, come book with me, because it reflects badly on you. You look unprofessional, you look a bit desperate, and you look needy. Trevor Milton looks all of these things when he's talking about Elon Musk. Nobody in the world can doubt or deny what Elon Musk has done, and he's doing great things for the world, so he should not be disrespected like that, right? He's an amazing leader, and he's making the world a better place, so give the man some credit. Even if he is your competitor, you look like an idiot, right? Another thing, how he comes across. I think he comes across really badly. He comes across as a bit of an ego. He comes across as like he doesn't care about anyone else. He contradicts himself. This guy is one big red flag in himself for me. He's always trying to sue people. He's trying to sue Elon Musk. He's trying to sue, I think, Bloomberg. He's trying to sue news reporters for saying the wrong thing about him. Just give it a rest. Concentrate on your own company. Concentrate on building these amazing vehicles that you're going to build. For me, he is one big red flag, and I would avoid him and I would avoid Nikola. Unless something drastically changes, I could be eating my words in a year's time, but unless something drastically changes and he backs up these promises with results, words are cheap, talk is cheap, action is what we want to see. We want to see execution, and this guy is just not executing. So for me, Nikola Motors is a big fat no. It is an avoid. So let's move on. We'll move on from Nikola because we know they're a no-no, right? Do not please lose any of your money investing in Nikola. I cannot stress this enough. I really, really, really mean it. Nikola are not the next Tesla unless something radical changes. So this next one for me is a watch. It's a bit of a spec play. If you were to invest in them, it is a bit of a spec play. You are taking a bit of a gamble on this one, but it's very, very interesting. I quite like this one. Now, Hyllion, how it's pronounced, you can see here on the website. I did have to double check that because I thought it was Hyllion for ages, but it's actually Hyllion. Now, they went public at about $10 a share. They trade under Tortoise Acquisition Company. And they went public at $10. They went all the way up to about $27. And now they're trading at around $19 per share with a market cap of around 500 million. Now, as I mentioned, it's always very important, especially for me. One of the number one things for me is the CEO, who's running the team, what direction they're taking the company in, what's the future of the company look like. It's all in their hands. So for me, if we take a look at the board here, you can see there's Thomas Healy is the founder and CEO. There's Patrick Sexton, the CTO. Greg Van der Veer, the CFO. and Michael Camp, the COO. Now, the common theme which I see across pretty much all these guys here is their experience. They've got Patrick Sexton's got 23 years senior engineering experience in automotive industry. Greg Van der Veer, 30 years senior finance and CFO experience. Michael Camp, over 35 years of senior executive sales, marketing, product management, and profit and loss experience in high-tech companies. This Thomas Healy looks a bit younger, but he was a Forbes 30 under 30 in 2017, so he's a pretty young guy. He's got 10 electric vehicle powertrain patents. So they look a good mix. They look like they've got a good bit of experience there, and for me, that is a good sign. They look like a good. You should never base, your whole bull thesis of a company on what experience they have, but it's a huge factor. And to me, they come across as honest. I've seen an interview online. They come across as honest. They come across as genuine, and I do think it's important. But you could argue, how does Elon Musk come across? He comes across as, I don't know what Elon Musk comes across. He just comes across as funny, amazing. I don't know. Let's not talk about Elon Musk too much because we could talk forever. But these guys, at face value, look pretty good. Good range of experience in terms of sales, marketing, money, and the actual automobile industry itself. So for me, that is a tick. So Hyllion are more similar to Nikola than Tesla. Tesla have the full range. They obviously have the solar, the cars, the semis. It's just trucks with Hyllion. But if you look here, the 7-year total cost of ownership. Now, this is obviously going to be a bit more biased towards Hyllion than Tesla or Nikola, but you can see the 7-year total cost of ownership of owning one of these is $279,776, whereas Tesla is $438,000 and Nikola is $637,500. So these are all talking about their electric vehicles. Now, Hyllion offers a natural gas option as well, with over 1,000 refueling stations across America already, which is obviously a great sign. Now, if we just go here, you can see the refuel or recharge time is about 30 minutes with Tesla, 10 minutes apparently with Nikola, and 10 minutes with Hyllion. With Hyllion, we can look at that and look into a bit more detail in that, in terms of we can see that as, that's probably legit. They have a company, they have the vehicles already. Nikola, this is just claims, right? Tesla, 30 minutes, okay, fair enough. In terms of the range of the vehicles themselves, Tesla, 500 miles per charge. Nikola, 750. Hyllion, 1,300. Now, if that is true, that is amazing. I would imagine Tesla's was probably a bit higher than that. I can't see how Hyllion will be almost at 3 times Tesla, but that range is great. That is really, really good. 1,300 miles per charge is insane. If you think these vehicles are mainly going to be doing long distance drives around America or wherever, you want to be able to do some good miles. Now, 1,300, you should never be driving 1,300 miles in one hit without a rest anyway. But if you're not super near a recharging station, that you want to be able to get a good whack out of your vehicle. The 0 to 60, it's not really important. They're all very similar anyway. The 0 to 60 is not super important with a vehicle like this, but it shows some really good signs there for Hyllion. And this is all tried, tested, and proven. Whereas, for Nikola, Nikola doesn't even need to be on that graph. They've got no proven vehicles. We won't talk about Nikola too much because I'm just getting my blood boiling just thinking about them. But Hyllion, so far so good, I think. So let's look at some numbers and some financials, okay? So this year, these are all expected numbers, by the way. So over the next 4 years, 5 years, these are all expected numbers. So they're expecting to sell 20 vehicles this year and make $1 million in revenue. Next year, they're expecting 300 units sold and $8 million in revenue. And if you go up 22, 23, 24, by 2024, they're expected to make 34,500 units sold and $2 billion in revenue. So that says there it only reflects 2.2% of 94 plus billion annual addressable market. So that's factoring that they're only going to be at 2.2% of the market by 2024. Now, to make a company like this, to design a company like this, you need a lot of money to get started. It's not like starting a coffee shop or something like that, or a gym. This is millions and millions and millions of dollars you're going to need to put into this kind of company. So I don't think there's going to be a huge amount of competitors in the coming years. I think there may be, and there may be some trends from other companies already out there. If it's a Toyota or a BMW, they may do something like that because this is the way of the world. There are other companies which I haven't mentioned here, such as Workhorse or Rivian as well, but if they're only hitting 2.2% of the market, that's a $2 billion in revenue they're going to be making by 2024. So for me, this all sounds pretty promising, to be honest. They're not ridiculous. They're not ridiculous estimates. They're pretty reasonable. So far so good. I really like what I see with them so far. So they are a SPAC company, which means they don't have to do their own IPO. Essentially, they're doing it through another company, which is called a reverse merger. But when it all goes through, when it's all finalized, I do think the stock price can go up a bit as well. It might go up for a bit, it might drop off. But as a long-term hold, I definitely think it's a good option. I wouldn't say it's a 100% guaranteed buy because it's so early on in the stages. But for me, I'm not invested in this company, but I'm definitely going to be keeping an eye on it and seeing what happens over the coming months and even years. Now, there is a very good chance I may get into it if the price drops off a bit without any good reason. I would like to see a little bit more in the production line. I would like to see them delivering a few more vehicles, but I definitely think it's an exciting company. It's definitely one to watch. And as I mentioned earlier, it's good to catch a trend. And this is something which is going to be definitely big in the future. EV vehicles are huge, renewable energy vehicles are huge, and for big trucks which use a huge amount of resources up, like traveling, delivering goods around the country and stuff like that, I think this could be a very, very interesting company to watch and can really hit a niche in the market which isn't really there yet. So yeah, for me, it's not a solid buy, but it's definitely one to keep an eye on and keep a lookout for what they do in the future. So the next company is Nio. Now, if you don't know, Nio are a Chinese-based company. So I don't know if that's a red flag. I wouldn't quite say that is a red flag for me, but it's definitely something I would consider before putting any money into a company. Now, if you look at Luckin Coffee, the CEO was doing something dodgy with the numbers, which bumped the share price up. They basically made out they were more profitable than they were, and the people were buying into the stock, and it had a totally unwarranted price tag. This goes on a little bit more in China than anywhere else in the world. So for me, that's almost a red flag. It's something I would definitely consider, like I said. Now, at the moment, they're trading at around $12 a share. They went public at $7 a share. They shot up to around 15, and now they're hovering around $12 per share with a market cap of around $15 billion. Now, China is one of the world's worst culprits, I should say, in the world for pollution. They produce a lot of pollution in the world, which is obviously a bad thing. Now, the Chinese government are losing a lot of money as a result of this. So, where does Nio come in? Nio's a renewable energy company. They mainly do cars, right? So this could be a real big gap in the market. Although Tesla have got their Shanghai gigafactory, and Tesla are pretty big in China, I think Nio can definitely be competing with them. Now, as long as the numbers are all right, as long as nothing dodgy is going on, they are selling cars, right? So let's just look at a few numbers. So in June just gone, they were up 179% year on year of electric SUVs. They sold 3,740 vehicles. So that's not bad. Like, that is not bad for 1 month. In the whole quarter, they delivered 10,331 cars, not companies, which is up 191% year on year. That is not bad at all. So Nio's main car, the ES8, is quite similar to the Tesla Model 3. Now, in terms of like the range of the vehicle, the website states here that it's a 580 kilometer mile range, which is about 360 miles. That is considerably more than the Tesla Model 3. Nio has also secured funding by the Chinese government of almost $1 billion. So they're heavily supported by the Chinese government. Remember what I said earlier about China being one of the world's worst in terms of pollution? The government are doing something about it, and rightly so. So in terms of the actual vehicles and the amount of money they're making, the production, it all looks quite good. For me, as I mentioned earlier, I wouldn't invest in it personally. Now, the reason why I wouldn't is because they're based in China. I always think it's a little bit dodgy. We're not talking about an Alibaba or a JD who are have been around for donkey's years and have been audited before and they've come out of it fine. We're talking about a new company. So for me, investing in a Chinese company, I'm always really reluctant to do. So personally, I wouldn't invest in them at this stage. I would definitely keep an eye on them, as I mentioned with Hyllion. Look out for what they do in the future, see how much money they make. But personally, I wouldn't put any money into them just yet. Out of the three so far, the only one I would consider putting any money in is Hyllion. But again, I'd still want to see a few more figures from them. But yeah, let's move on to the last one. The last company is Tesla, in case you hadn't guessed it. Now, Tesla is a very, very volatile stock. At the moment, it's trading somewhere around $1,500. It's so varied from $1,400 to $1,600 at the moment. At the start of the year, it was $900, went as low as $350, up to $1,700, and now it's in that range, $1,400 to $1,600 at the moment. It's a very, very volatile stock. Would I still buy it at this point? Yes, if you have a long-term outlook. Now, if I give you one reason, it would be Elon Musk. He is tried and tested. He started up PayPal, successful company which he sold. Obviously SpaceX, which are doing amazing things, and now Tesla. Elon Musk is the big dog. He is the number one. I would invest almost because of Elon Musk alone. He's done amazing things. But let's look at a few facts as to why we should consider investing in them. They're going to have self-driving. Now, self-driving has been a bit controversial because there's been a few accidents and unfortunately a few fatalities. But self-driving is meant to be ready next year. It might be later in the year. It won't be full self-driving. They're not really allowed to call it that. I think in the US they are, in Germany they're not. But they're going to have self-driving, which is going to be the future of the cars. They've got the best battery technology. They've got gigafactories in all the world's hotspots. So they've got one in Fremont, California. They're building one in Austin, Texas. They've got one in Shanghai. They're building one in Berlin. They're going to have another one in America. Elon Musk wants to grow his company 50% each year. Now, when Elon Musk says something like that, there's a very good chance that will come true. He has delivered on everything he has said he would so far. Yeah, a lot of the time it's been late, but he always delivers. That's the thing. Elon Musk always delivers. Now, they're very innovative. They have different streams to their business. They have the Cybertruck. They also have the Model 3, the Model Y, etc. They're building on solar, which is going to, I mentioned that in another video, it's going to be really big in the future. Elon Musk mentioned that on a conference call recently. Solar is going to be huge for them moving forward. They're also going to have money coming in constantly from other companies, regulatory credits, and people think that's negative. I think it's a good thing. If other companies are not complying with CO2 emission regulations, they have to pay Tesla money basically, which is a pretty cool thing for Tesla. They're also going to be included in the S&P 500 probably soon, which provides a certain amount of prestige, and that will mean automatically Tesla shares are being bought because a lot of people are dollar cost averaging index funds, including hedge funds as well. So there's a lot of money there as well. If you're going to buy one of these companies out of the four I've mentioned, it definitely would be Tesla. Yeah, there's going to be some drama along the way. There's going to be ups, there's going to be downs, but over the long run, it will go up. It will probably be a $3,000 stock in 3-4 years' time, I believe. But if there's one you should consider out of the three, it would be Hyllion. I like that they're US based. I like the board. I like that they're already producing cars. I like that they've got 1,000 pre-orders. They've sold some cars already, so I do like what they're doing. So I would, if you're going to put, say, as an example, $5,000 into renewable energy, I'd be like, right, I'm going to put $4,000 into Tesla and $1,000 into Hyllion as a bit of a spec play. This is not financial advice though, I'm just saying what I would do. So I hope you like the video anyway, guys. If you'd like me to go into a bit more of a deeper dive into any of these companies, let me know in the comments down below. I'd be more than happy to do that. This was just a kind of a surface level video on these four companies. One you should avoid, Nikola. Hyllion, definitely consider that one. Tesla, I would invest in it personally, definitely. And the other one was Nio. Probably not because they're Chinese based. Might not mean too much, but to me it does. Anyway guys, thanks a lot. I'll see you in the next video. And if you haven't already, please hit that like button and please subscribe down below.